Good, everybody. Marvin, how we doing? Marvin was first in class tonight. That was impressive. I'm sure he just wants to say, look at ABGO, banger stock going to 1,000. Did I get it right, Marvin? Yeah, ABGO. It's been a good one. Unstop, This one's kind of had no breaks the whole time, even while some of the others are lagging. It's kept on going. Excellent, insanely excellent report out of them today, too. I mean, it was shockingly good and optimistic. I mean, not that I think like it would be bad, but it was just like insanely good. No, I don't use the hourly 50, but well, so that's a double-edged, that's an interesting question to answer. Yes, if I'm on the hourly chart. But for the shorter time frame stuff, like how we use the hourly 20, on our fives and 15 and 30 minutes, no, I don't ever use it that way. But it's really good too. And actually, it was funny. One day there was a guy and he's like, you're always posting about that, and I've been meaning to ask you, mine looks different. Well, when you add, and wow, they were just because we were flat today, they were flat today. um, uh, he was like, I've been using it and it works good, but it's at a different spot than yours is. And that's because if you use this script that I share, it auto loads it to the 50, and he hadn't realized that. And so he had just been trading that hourly 50 on, all time frames, doing great with it. The 20 is just what I like. And so, and it's an Al Brooks thing. It's not like I found it or anything. But the 20 is just what I like. And so it's what I tend to stick with. But sometimes, that and we can always just look at it, we got plenty of time. We'll give it some more time. See if a few more people want to show up. Only a couple of us tonight. This is the 50. Works great also, I mean, and it's gonna work in the same way as the 20. It's just likely going to have less, like, you're gonna get less trades, if you know what I'm saying. I won't say that the trades will be better or worse or anything like that, but the hourly 20 uh works great every single day. The hourly 20, basically, it provides some sort of either information or a trade every single day. Well, here's one day where it didn't, but obviously that was just when SPY decides to do those 5, 6 buck runs, you're just going to get extended. But I mean, every day breaks, double bottoms, break and retests of it, they tend to just work over and over again. Yep. Those are all great ones too, Norvin. And that's the awesome thing. And something that I always try to talk about EMAs. We did our EMA class. I don't remember if it was the last one or the year or the one before it. EMAs are awesome because there's, I don't want to say there's no right answer. There's like some things you don't want to do, like don't use an 8 and a 9 EMA because you won't see much difference. Like they won't be telling you much. But one of the great things about EMAs is set them to whatever you want. Find combos that you like, find crosses that you like, find things that maybe provide good double bottoms or double tops. That's why I love the hourly 20 for the double bottom and double top trades on it. Find an EMA or an SMA combo. Most of us use EMAs intraday for day trading stuff. Well, SMAs work great too, and SMAs were used long before EMAs were used. And I mean, we'll just pull out 2050 200. You're going to get great trades off of these SMAs basically every single day as well. There's find EMAs, find SMAs. Maybe you don't like the volatility of EMAs. Well, then try out some SMAs. And I'm not going to say that they are required for trading or anything like that, but they are very like they're very nice for just letting you glance at charts and get information from them. So use whatever works for you. Yep, exactly, exactly. And so that's the thing with those bigger EMAs, that's like even when I talk about the even if you talk about uh using, like, people love to take trades off the 9 EMA. I don't. Like I would rather take a trade off the 20 or the 50, they're just stronger. If you hit that 50 EMA, you get a reaction. There's one, I think it was Microsoft maybe. Let's see. Um, there's a really good one of these today. Oh yeah, this one. And we were watching this in the voice chat. Uh, just riding this 50, riding this 50, riding this 50. When you finally get the break below it, you start moving again. We had been, basically consolidating for 2 hours. Finally pull back into the AEMAs, finally pull back into the 50. You get a reaction. And this is just a you know, a little 5 minute 50 EMA. And frequently, I mean, not always going to just give you the absolute bottom tick or anything or top tick, but typically they're going to act as strong support or resistance. Here's one where maybe you did short the breakdown of it. I probably wouldn't have with this kind of a setup, and you got stopped out. Well, the next time you try it, this is a great entry, offers it short, and so I really prefer, I prefer those bigger EMAs than the 9. Dude, I couldn't have said it better myself. If bricks don't use them, I don't fuck with them. Okay, welcome everybody. Give me a couple more minutes and we'll get to rolling here in just a second. We are just doing a little chat beforehand. One more second. Okay, and just about ready. Let me get a drink of water. Norbin, swing strategy. Ask again at the end of class. We'll see if we have time. This one, the opening range class is pretty quick. We'll get through all this information. Then I'd like to have questions at the end of it. It's a simple idea, but then it has a lot of little, parts to it for how we can use it. And so tonight we should be done with a good 10 15 minutes left, so just ask some questions at the end, Arvin. If you want, I'm sure you want me to pull up charts. Everybody, or you always want me to pull up every chart, so but that goes for everybody. We can check out charts at the end of this, but with that, happy to have you. Welcome, Dirty River. Tonight we are talking about the opening range. It's something that I trade all the time. For any of the newer people in here, well, if you aren't in pro, I've been a little less active in my tab. I've been trying to get used to the pro schedule. I'm doing 6 or 7 voice chats a week or something between pro and premium. So just getting used to it. We'll be back to posting in the tab soon. But it's something that I always, watch, something that I watch every single day. And uh, Gabriel, what's your question here? I'm assuming that's supposed to be EMAs. It depends. This is 920 and 50, but we aren't even talking EMAs tonight. We're gonna get those out of here. Well, we're gonna have one EMA on because it's the best EMA ever, and it just happens that's what my study is. So tonight we are talking opening range. It's what I trade every single day. Not only is it something that it can provide us actual trades. We can take trades with the opening range being a big part of our thesis of that trade. It can also be used to give you an idea of what the market is doing. Is the market ranging? What is the market doing? Are we ranging? Are we trending? Are we seeing breakouts? Are we seeing breakdowns? Are we seeing signs of reversals? Things like that are always what I will use for the opening range for. So it just is a very simple way to give us a very broad view of what's going on in the market. And some of the main questions I get asked are, do you use it on everything? Do you use it every single day? And yes, to both. I use it on everything. I use it every single day. As we get into some examples later, I'm just going to pull this up. This is this goes on a different screen, but this is what I look at every day. I obviously typically have some more indicators and stuff on there, but these blue lines, that's the opening range. They are on every single chart that I use every single day. And so it's just something for me that is a really, really easy tool to analyze the market. And if we're trading around, certain things, or, we're seeing certain things around the opening range, then we can kind of base the rest of our trading around those ideas. And so, uh, yeah, we're actually going to touch on what some of the we're going to touch on using it that way, Narvin. Because this is I've been preaching the opening range to people in here for years now, and so it's really simple, and the ideas behind it are really simple. I guess for now, I'm going to take so I have a study, and if anybody likes this lecture, and you like what we talk about in it, and you don't want to have to chart it every day, I think I have it pinned in my tab. If I don't, just DM me. But I have this opening range study. It's based on the time frame that I like. We're going to talk a little bit about that as well. But it's currently just these blue lines on the chart. But really, what is the opening range? How do we chart it? What's the one that I use? And so again, we've kind of mentioned him. I try to mention him in every single class. I think he's one of the greatest traders to ever live. There's a guy, Al Brooks. Other people try to take credit for, the opening range strategy, things, orb strategy, opening range breakouts. It all is taken from Al Brooks. There were some people before Al Brooks in late 70s, early 80s that were starting to notice some of these reactions at certain times a day. But because it wasn't, we had algo trading, but it wasn't like it was going to come to be in the, those mid to late 80s, early 90s, all the way through the 90s, that's when the algo trading really picked up. And so there was some ideas of these early opening ranges, but Al Brooks was the one who really he he started trading. He wasn't a professional trader or anything like that beforehand. Started trading, was really into trading, struggled like everybody else, but is a big math guy. So he started getting into the statistics of the market. And the statistics of the market are awesome. They're great things to do. And I'm not talking, seasonality, like, oh, September is always bearish. I don't buy into that kind of stuff. I've seen plenty of green Septembers, I mean, I've seen Santa rallies not come that last week of the year, seasonality is a tough one. And it's just such a wild card that it's not something that I personally follow. When we're discussing statistics in the market, it's things that, repeat themselves. They're ideas that are backed by, not only math, but time in the market and observing the market. And so that's what Al Brooks has always done. When he trades, his charts are insane. He has no support resistance. He has nothing. He has an EMA and he has the candles, and that's all he trades. I'm not saying that's what everybody should do. In fact, I think most people should use at least a couple indicators. I think less is more, of course, when it comes to indicators, but he trades the chart and he trades exactly what the chart is telling him, and he trades the statistics that he knows. And some of my favorite statistics, and I've studied him for years, and I read his book. Well, of course, his books are serious for anybody who's seen them. It's not, one time through doesn't really mean much, but I've read his books on and off a bunch. I've watched a ton of his videos, and one of the main things that has always stuck out to me is these ideas of the opening range, as well as yeah, his books are beyond intense. His videos are hard. I mean, if anybody's listening to this and they want to go listen to some Al Brooks, good luck. He's an older guy. He's dry. He's boring, but he's real. He's proven, which, I mean, that's miles ahead of most of the people that you're going to see on, YouTube or anything these days. He's a real guy. He actually trades. He actually makes money. He's a very, very good trader, but his videos are like, oh man, he is dry. He's dry. And same as his books, they're like the most technical thing you could ever imagine. But some of the statistics that I've fallen in love with from him are the opening range, and then it kind of goes hand in hand with breakouts and this idea that he calls breakout mode. You might hear me even say it on occasion. And so what is the opening range and what are the statistics around it, and how do I draw it, and what are some other ways that you can draw it, depending on, because that's the really cool thing about trading. I like an hour and a half opening range. We'll get into what that means in a second. Maybe you find you like the hour opening range, and that actually fits your style a little bit better. Tonight, we're going to be talking about the hour and a half opening range. And what do I mean by that? It's the first hour and a half of the day. You might hear me say, the 18th candle, 18th bar of the day. What I mean by that is it's the fifth, or it's the 18th 5 minute candle of the day. And why are we concerned with that? And it goes back to those statistics that we talked about. And some of the statistics that one that he talks about is the probability that high or low of day has been set. And well, that's a weird idea to think about. And you might not think about how helpful it can be for you. What that does is give us a little bit of, I don't want to say bias, bias will kill you, but it can give you some opinions on the market. And so, what are the statistics behind it? Well, the very first candle of the day, right here, this candle, this actually gives you a 20% chance that high or low of day has been set on this very first candle of the day. Well, that doesn't give us a lot of information. And if you're trading on 20% odds, you're on the wrong side of it. So it's interesting to know that, hey, there's a 20% chance higher low of day has been set. On days where we just gap and trend all day long, that's a day where, the low of day was set in the very first candle of the day. Sometimes that happens. Prime example, yesterday. This what ended up being the low day. When it happened, we had no idea there's a 20% chance this was low a day. And it ultimately ended up being low a day. Well, that doesn't really help us as traders. But as you work in a little bit more, as you get to that fifth, sixth, seventh candle of the day, you've seen 30 minutes, 35 minutes of the market moving. Well, now your odds are going up a little bit more. You now have a 50% chance that this is high or low of day has been set, which, again, is it helpful? Yes. But 50-50 is tough because you know, we as traders, and of course there's, when you break it down to its simplest form, trading's kind of 50-50. You're going to be right or you're going to be wrong. You want to do everything you can to, maybe feel like it's in your favor. However, it's a 50-50 chance every time you click the button. That's the unfortunate side of trading. But we want to find things that are a little bit more in our favor. So, 50-50 doesn't quite help. Well, by the time we get to the 12th candle of the day, we're an hour, and that's an hour into the day, somewhere right around here. By the time we get to that 12th candle of the day, now you're talking a 70% chance that high or low of day has been set. And we as traders find that helpful. When we got 7 out of 10 times something is, it's correct on the higher low of day, well then that actually kind of, it starts to mean a little bit something to us. So like up here, this is an hour into the day. This is the first candle of the day. Obviously was not higher low a day. This down here, this was about that 50% chance higher low of day had been set down here. That's, your 30 minutes, 45 minutes into the day, whatever it is. Then as we start to move up here, we're now an hour and a half into the day, and we can start to say, or we're an hour into the day rather, and we can start to say, okay, there's a good chance the high or low has been set. Well, I wait just a little bit more. And this is where you might kind of start to find, what you like to trade, the way that you like to do it, the opening range that you like. I like to wait a little bit more because we have this, exponential growth of percentage chance happening right now. So if you wait all the way until, for me, it's 8 o'clock candle, but it's whatever, 11 o'clock East Coast time. If you wait for this candle, you now have a 90% chance that high or low of day has been set. Today is actually kind of a funny one because if you count these little, high of day was not set because we pushed 4 cents higher, but that's pretty dang close. We now know there is a 90% chance higher low of day has been set. So when you hear me discuss the opening range, that is what I'm talking about. And so how do we chart this and how do we use it? And again, we're an hour and a half into the day. A lot of us like to recommend to people, let an hour and a half pass, let an hour pass before you really start trading. So you don't get caught in this kind of stuff or just dramatic reversals, the market kind of finds itself after that. So how do we use this to our advantage and how do we chart it? Well, my way of charting it is I draw a box around it. And then I always make mine green just because I don't like to look at that. I don't like to look at the gray box. So I always make mine green. And how did I chart this? I found the lowest low, which was right down here, and then I found the highest high in the first hour and a half of the day. As I mentioned, yes, this, 2 candles later, we wicked over it, but we now have a 90% chance that high or low of day has been set. We, of course, don't know if it's high or day has been set or if it's low of day has been set. And again, this is 90% chance. This isn't 100% chance. There are days where it doesn't work. If we were being extremely technical today, the opening range was inaccurate because we pushed 2 or 3 cents above it. So, and of course, there's times where it'll be wrong much more. Those big old up down days or down up days. There's times where it will be wrong, but the levels will always matter. And so, how can we use it? What are some things we can do? What are some ideas that we can get behind it? And, how can we base some trades around this? And so some of the things that I like to look for and some of the things that I always like to mention to people is, everybody wants to trade big trend days. Everybody wants to catch breakouts. Everybody, wants to just be able to hold their runners all day long, come back at the end of the day, cash them for big money. Well, hate to be the bearer of bad news, that's not going to work statistically 6 out of 10 times. The market spends 50 to 60% of its life intraday trading in ranges, not trading in trends. Of course, there can always be intraday uptrends, intraday downtrends, but as a whole, even today, I mean, we did ultimately have technically a breakdown for those last couple candles of the day. But even today, this is a range day, no matter how you add it up. Most hedge funds have checked out by that last hour of the day. You get the little interesting market on close stuff going on for the last half hour. But there's a lot of hedge funds that they aren't even checking the price after 3 o'clock. They don't care about this end of day volatility. And so, how can we use this to our advantage? What are some trades we can take around it? And one of my favorite ones, and this is again an Al Brooks, statistic, um, you know, 80% of breakouts fail. So I was talking to a friend of mine today. I don't know if he's in here, but I was talking to a friend of mine today, and he was telling me, I'm really focusing on being a breakout trader, and blah blah blah. And I said, great, and I get that, but you have to understand that you are focusing on the statistical lower probability trades. 80% of breakouts fail. So that means only 20% of them work. So if you're focusing on being a breakout trader, you're focusing on catching, 2 trades out of a potential 10 trades, you might get 2 of them. A range trader, a scalper, day trader, whatever it is, a range trader might be able to capitalize 8 times in the time that you capitalize 2 times. So I always encourage people learn how to trade ranges. And the opening range is a really, really wonderful tool for doing that. We know, higher lows of days have been set, and we know most breakouts fail. So how can we use this? What are some things that we can look for, every day in trading? And again, with all of my classes, I always like to say, when we're talking trades and we're talking things like that, and we're looking back on the day and we're analyzing what the market is telling us, it's really, really easy right now. It's a lot harder. Everybody has some difficulty when the candles are actually moving. Right now we can look back and say, well, I would have done this, 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 but that's part of trading. That's how you learn. And hey, well, I've seen this, in a lecture, I've seen this on charts before. I'm going to react in this manner. And so the first things that I'm always going to, think of are most breakouts fail and higher low day has been set. So I am instantly assuming we are ranging. I go into every day assuming that we will mostly be ranging. I will give you the other statistic. So if we break out of the opening range, the statistic now becomes we have a 75% chance of a trend up or a range outside. Down here, we have the exact same thing, trend down or trading range. So we know one of those two things is going to happen when this breakout comes. So we can, again, use that statistic to our advantage. However, most of the time, that breakdown doesn't come. So how do we trade something like this? And what are some things we can look for using the statistics that we've learned? Well, another thing from Brooks that I like to discuss is breakout mode. And all breakout mode is basically when you get a reversal or you go one way and then you reverse the other way. That's basically what breakout mode is. So, you would look at this as we tried to push up and we failed, so we've gone down. Well, we've now reversed up and gone back over the highs. So we can start to use this sort of statistic and these sort of things to trade. And what I'm going to look for, reversal down, and now we have a reversal up. As long as we're above this candle, I'm interested in being long. So that's what I look for. I look for long trades as long as we're, staying above this candle or very close to this candle. I'll stop out, anywhere below these candles, but I look to buy dips here. Well, I now know the opening range is coming. So we had our nice push up. Maybe we bought this dip down to the breakout mode. I now know the opening range is coming. When 8 o'clock comes around, or 8 o'clock my time, 11 o'clock Eastern, when 8 o'clock comes around, I'm going to exit my trades if we are at an extreme. If I'm short and 8 o'clock's coming, I'm getting out of those shorts. If I'm long and 8 o'clock's coming, I'm getting out of my longs because I know we have a 90% chance higher low day has been set. We don't know if it's higher or low, but we know that that has been set. We now also know we have an 80% chance that if we break out, we're failing. That's it, 80% chance. So 8 out of 10 times, or 4 out of 5 times, however you want to look at it, we are going to fail the breakout. So that's what I start to tell people to do is, oh yeah, what do I mean? 8 o'clock, I'm West Coast time. So sorry, 11 Eastern. Yeah, 11 Eastern. So 11 Eastern time, I apologize. 11 Eastern time, we're set. We know the breakout likely fails. So what do we watch for? We watch for rejections here. And if we're seeing rejection, we can start to consider one of two things, depending on what the market is doing. And I'm gonna show you, we're gonna add on to this a little bit here. But I'm trying to explain just some things we can do every day. So you're in Houston. Is that Central time or Eastern time? Or Central? You got to be Central time there. Are you Mountain time? Central. So for you, it's going to be 10 o'clock. Yours is going to be 10 o'clock. Oh, you're Mountain. So for you, yours is going to be 9 o'clock. So here we go. We're at the top of the opening range. Oh yeah, when I say long, I'm saying calls, short puts. I also trade futures on occasion, so those as well. Or if you're a share trader, you can be trading. You obviously have to have money to be scalping shares. But share trader anyway. Yep, long. At highs, I'm not looking long. I'm looking short. Is basically what I'm saying here. So we push up, we start to reject. We now have two decisions to make. Do we think the breakout is going to come? Because now we've tried it 1, 2, 3 times. The fourth time, 80% of breakouts fail. So this is a failed breakout, failed breakout, failed breakout, failed breakout. We start to wonder, are we going to break out, or do we want to look to be short? So as I have said, repeatedly, I always assume we will range, and we're getting a bunch of rejections at the opening range high. So now we as traders, all of our trades, the best thing that we can do is reduce our risk and maximize our reward. So if we're long here, that's fine. You're long at resistance, no questions asked. Your stop basically needs to be below, maybe this left high over here. And so this is going to get a little bit technical, but this is how this is how I'm analyzing trades using the opening range. If you're getting long up here, you're buying calls at resistance, but ignoring that fact, you're looking for the breakout. Fine, but most breakouts fail. So I don't ever trade like that. I look short up here. If I'm long here, my stop is 40 cents below me. And if I'm in 607s, I'm going from out of the or in the money to out of the money, and I'm getting hurt, you know? If I'm short up here, my stop is a close outside of opening range. So I try to get short as close as I can to the top of the opening range, knowing that my stop is right overhead, 10, 15 cents, you know? We know that when we're trading and when you actually trade the charts, and we'd have support and resistance on here. Of course, if you're short up here, stops are overhead. Where your long stop would have been is you you where your long stop would have been is where you want to take your first trim. Then again, you always look left on the chart to know what the chart is going to do to the right. So if we're short up here, if we're short up here, we trim here, we trim here. And then again, I always look for forms of consolidation. You happen to see that, we have what was originally our breakout mode. This is what activated it. Maybe we got a scalp up to here. We're now back below it. So your stops go to that breakout level. Maybe it catches right down, maybe you don't. None of that, profit doesn't matter. Profit comes, but it's all about entry and stop out. That's what matters. So now again, an easy liquidity sweep. I mean, yes, but that's why I don't. And this is difficult, and I would, I don't use that terminology, but I just call it a failed breakout. But I'm assuming what you're saying, big candle push up and stop you out, and then they sell it down. Absolutely, that can happen for sure. On occasion, you this is one where, while your risk may be slightly increased by holding it, this is one where uh you want to not be using a hard stop. You need to let a candle work for you. And that's, is there added risk by doing that? Absolutely. But something we know is most breakouts fail. First breakout fails 90% of the time, and retests are downright commonplace. So if the breakout's coming, you will get a push up, and you will very likely, at least, and if you get worried out, you will almost always get that wick back to break even. At least very, very close to break even, and you can take the exit. But yeah, you don't want to just to give an example of what not to do not short right here. And we're saying it stops the close outside of this opening range. No big deal. Do not short right here and set a hard stop right here. 5 cents above you. You will stop out. Every single time you will stop out. So this is a trade that, you obviously have to understand price action a little bit, and you have to manage it. Well, as I've said, you can't just have one form of confirmation on any trade. That's never, ever, ever enough. I think it's something that a lot of people struggle with. They say, "Oh, we're at support, so I'm going to buy calls." Well, I'm happy you aren't buying puts at support. It's not quite that simple. So this is where I bring in some other charts. And the charts that I choose to watch, and sorry if these are a little scrunched on your screen. The charts that I choose to watch every day are Apple, Amazon, Microsoft, Nvidia. So, they're just big names. They're what's in the S&P. It moves SPY, it moves QQQ. I also watch XLF and XLE every day. I have a little bit of screen space, so I'm able to watch these things. Well, oh, look here's a really prime example of what you were talking about. And again, opening range, wick above it, doesn't hold. So if I'm short here, this is not a stop out. This is not a stop out. Did it get a little bit against you and maybe it got scary? Yes. But that is why you wait for candles to close. And so, yeah, TOS can be wild. But so we're going back to this. We have our charts here. We have SPY. We're kind of seeing SPY start faltering a little bit. So we're considering shorting it. And that's great. That's great because we're shorting the opening range. That is not enough confirmation. Now we go to the other charts. Here's Apple rejecting. And then we got Amazon rejecting, not breaking out of it. Here's Microsoft rejecting. Nvidia was the one that, well, I guess early, right as opening range was set. Actually, we can even say rejecting. And see how all of these are doing. Well, this one, let's see, it was set right. Yeah, so it was set right here. See how we're seeing selling right away. We're seeing selling right away. We're seeing selling right away. This is the only one that we aren't seeing selling right away, but we're seeing a failed breakout. Well, SPY is consolidating. So we have the consolidation right here while all of these are pulling back. And, so yeah, a lot of things are pushing up. So there's a lot of people looking to, you know, buy that pullback for longs. And did they ultimately make a little money on some of these names? Yes. But on SPY, they didn't. On SPY, they got torched. So that's what I do for my trades. And that is one of the main ways that I use the opening range every single day. Because I can, when I look at Apple, Amazon, Microsoft, Nvidia, um, well, I'm looking at about 25% of SPY and like 25% of QQQ right there. Slap on XLF and XLE, and you got like 50% of SPY covered just by looking at those 6 charts. So when we're getting this consolidation, everybody's looking for the breakout, I'm looking short because I see Apple at resistance, Microsoft at resistance, Nvidia at resistance, Amazon at resistance. Are they, necessarily support and resistance like price levels? No, but I view the opening range as, support or resistance, depending where you are. So when I see all the big names at resistance and SPY is also at resistance, you buy puts. That's it. You short resistance. And so when you can look at all of these names, and I don't exactly remember, um, oh yeah, XLF already set lower highs. XLE also selling. So you have most of SPY selling at this point. And I'm not saying dumping and markets dying or anything like that, but you have most of SPY selling at this point. So now, really just looking at the opening range, we've now analyzed the whole market. And you saw, just to pull them up again, how quick we can do that. And again, I just had this script, so it's these blue lines. Apple, resistance. Microsoft, resistance. Nvidia, resistance. Amazon, resistance. We now know, like it in 10 seconds, 5 seconds, however long that was, we now know that all these names are at resistance. If we start seeing some breakouts, great, then we can admit we're wrong. Everybody's wrong sometimes. Or maybe we get lucky and we get this nice move down. And so that is just a perfect example. And I was happy it was in today's market so that people can kind of look at it and see that refresher and say, like, oh wow, I can actually like apply this to what I was seeing. So that's one of the main ways that I use the opening range. I use it every single day. You have things like that presented to you every day. I, of course, think you need to couple it with, some EMAs or SMAs, whichever you prefer. I love VWAP. I trade the hourly 20. Those are things that I like. We've covered those in previous lectures, but those are the things that I like to, use and that work for me. And so that's what I stick with. And I think that, the opening range is a very simple thing. Whether you use the script that I have, whether you use the script that I have or uh, you chart it yourself, at least on Thinkorswim, you select the box tool and you draw a box around the highest high and lowest low. That's it. It's that, highest high, lowest low of the first hour and a half of the day. That's all that it takes to chart the opening range to give you a very, very good idea of what's going on in the market. So again, we're just going to expand on it and kind of go through the rest of today and what the opening range was telling us and some ideas that we could have had. And even one, I'm going to show you a couple of counter trend trades that, I took, reasons that I took them, and, you know, and whether they worked or didn't work, today they happen to work. They won't always work, but we're going to go through and we're going to talk about a couple more trades that I took, and really more, or not even talk about the trades that I took, trades that we could have taken with the information we gathered from the opening range. So again, we're just looking at the opening range. We don't have, and there could be more information from indicators and whatnot, but we're just looking at these nice, simple, basic charts here. So maybe you missed the sell. You don't want to chase this sell, really, like, you can try to buy puts here, but you're buying puts at support. You can try to buy puts here, but you're buying puts at support, and then eventually the chasers, the people who just couldn't resist, that's typically when you get these really volatile candles upside. Well, if you chased, nice, you made money. Don't do that again. Happy you made money though. But we can start to say, okay, we've had a pretty big rejection at this high. What are some of these other names doing? Well, we're seeing a bounce back up. And we're seeing a bounce back up. Obviously, Nvidia, seeing a bounce back up. And then again, seeing a bounce back up on Microsoft or Amazon. So I'm not gonna try to line up the times perfectly or anything like that, but we're seeing a bounce up on Microsoft. And then all of a sudden we see sellers. We're seeing a bounce up on Apple, or I guess probably this one. I don't know what time it was, We're seeing a bounce up on Apple, double tops, rejects. We're seeing Amazon bounce back up, getting nowhere near the opening range. And then Nvidia, we got Nvidia doing Nvidia things, breaking out of the opening range. Well, we also see SPY bouncing back up and not even getting to the opening range. So what is something we could do here? Again, when we are at extremes, at least for me, when we're at the highs, I look short. When we're at the lows, I look long. And you know, I look for reasons to be long. You can't just I'm buying calls here. We're on support. Like, that's what I'm really trying to emphasize here is you need more information than just one thing. And the opening range is something that can provide it for you. Well, we have seen all of those names, kind of start to push up and start rejecting. Apple even pushed up faster than everything else and then rejected before. Well, now Apple's setting a lower high. Now we got Microsoft setting a lower high. Nvidia again breaking out. Amazon bouncing, setting a lower high. SPY bouncing, setting a lower high. At this point, we're looking short. And how can we plan a trade like this? We've been able to glance at all those charts. We are assuming that we're going to keep seeing rejections. So we get short up here. And we know our stop is outside of the opening range. It's defined. It's a slightly wider stop than, we want to short as close as we can to that high. If the charts are telling us we want to short as close as we can to that high. And, if you're shorting these highs on these candles, you got 30 cents, 40 cents of risk on it, but you're looking for these lows down here, give or take. Obviously this is close enough. You should be trimming when you're within 5 cents a target. But you're risking 30, 40 cents up and you're making 70, 80, 90 cents down. Great risk reward on a trade like that. There's going to be a lot of people chasing calls on these big green candles. And that's, another thing that Al Brooks loves to teach and loves to talk about. And a lot of people, they somehow skim over this part, but because, he does talk about buying highs at big, bull candles while buying the pullbacks of those. The market can be super convincing. It can be printing like the most bullish candles where you think this like explosion of a breakout is going to come and then you get blasted, or just absolutely dump in the market and then you think the breakdown's coming and they instantly buy it. So the market has a very good way of convincing. It will frequently be, those big old candles can very, very often be the end. Like it's not uncommon at all that the largest candle in the trend is the end of the trend. That's it's known as exhaustion, and so it's very common. So again, we got markets setting lower highs, all of that stuff. We can look to be short. I wasn't trading through this part of the day. Well, now the market's selling, and maybe you got short again. Maybe you catch this bounce. Exact same plan right here. You pull it up. You pull up the charts. Microsoft still setting lower highs. Apple attempting to break out, but not succeeding, likely triple topping. Amazon, lower highs. Nvidia broke out, currently failing the breakout. So again, we look to be short here. Again, it's the exact same plan. Stops outside of the opening range, targeting previous lows. This is the one that ended up working really nice. Unfortunately, right around here is where I started, coming back to trading. Well, the next trade that I took, and there was more going on than here, the very next trade that I took was, and this is an interesting one because it's, kind of counterintuitive a little bit, was this breakdown right here. Because we know most breakdowns or breakouts fail, we got some calls in voice chat right around here. And why did we get some calls in voice chat right around here? Because we were playing and I think we did on this candle, we were playing the assumption that this breakdown was going to fail. Because technically speaking, here's the first test, here's the second test. That's only 2 tries. It's rare that a breakdown comes after only 2 tries. So we can take the counter trend trade here with stops on closes or even just pushes on high volume below these lows. And so this one was actually a trade that we were able to catch. Really nice bounce for us. Then again, I will use the opening range when we're outside of it for 2 things, entries and targets. If I'm not really buying the breakdown and today was a day where Apple sold, it's holding its hourly 20. Microsoft is selling, it's holding the big 450, 451 zone, even could be a triple bottom over here. Amazon, triple bottoming, setting like nice lows here. Obviously, Nvidia still strong. And so that's what I was saying down here repeatedly, that I had no interest in being short on these lows. And people kept jumping in voice chat, and I believe the 9 EMA was somewhere up here. They kept, I want to short it. And I'd say, well, I'm buying calls. And so we scalped this a lot today. I don't scalp downside much, but a few people were scalping the downside as well. I think it was the 9 EMA was right there. I mean, it was an easy short off the 9 EMA. Yeah, so right here, for me, when we were wicking down, I was viewing these, and we haven't got into trends in my classes yet, but just to show, I was basically watching, I don't know, some sort of trend like, I think like this or something. I don't remember exactly how I had my trend drawn, but something like that. Oh yeah, I probably went from here to this one or something. So anytime we were coming below 605, we were buying calls and catching that intrinsic value, get the nice payday on the pump over 605. Then people were shorting 609s, really nice pay. Well, then our final one, we had a trend here, and all that I'm targeting, 605, opening range low. That's all we're looking for on these little scalp trades. Well, we finally get this push back up. This was the one where I said, hey, if you want to short this 20 EMA, you short this 20 EMA. Trend is down. We finally got a big enough bounce that it's worth shorting. And then again, these ones, it paid again, but we bought these, push up to the hour or that 20 EMA, we're out of the trade. And why are we buying calls here? Just because of all of these lows. Even if, and these are same days, so if you do take the stop out, you're smoked. But if you're trading the next day contracts, if you have to stop out after a 10 or 15 cent drop, you're going to be down like 5% on the contract or less. So that's why we take those trades in today for a little bit of fun. And then ultimately, we did see that nice sell. And if we pull up these other charts, well, Apple, not so much. Microsoft dumped it right to the opening range, held it nice there. Nvidia broke back into the opening range. Amazon and Apple never really broke down that bad today. They did basically a whole bunch of nothing, closed right around where they opened. So no big deals there. But that's how I use the opening range every single day. So nice. We got about, I don't know, 10, 15 minutes left. Let me look at my notes. Yeah, I think we got it all covered. I think we got it all covered here. So, is there any questions? Like I said, it's a relatively simple thing. It just gives you some nice strong levels on the charts, and then if you use it to really look market wide and say, God, is everything in the opening range? Then we're ranging. Is everything breaking out of the opening ranges? Then we're seeing nice breakouts. I mean, that's how I use it every single day. So, do we got any questions? And again, I should say, even on these trades, these pushes back up to it, you short it, stops above it. That's it. Same way as these highs. If you're shorting down here on the breakdown, your stop is a break back in. Same as up here, if you're longing the breakout, if you're longing the breakout, your stop will just be, and I don't know how this one lined up yesterday. So let's see. This was basically the opening range yesterday. So it was a day where obviously, I mean, market was strong, and this was a day where I even had people ask me, I'm not going to short it because everything was strong. Everything was breaking out. But if you buy this breakout, your stop is just to close back into here. Obviously, you're going to target your next level, ride the EMA, whatever it is. But you buy this breakout, your stop is a break back in. So it just gives you a very, very cut and dry, am I right or am I wrong trade. Right on, George. Happy to hear that. Showing after hour pre-market candles, you got to. I think they're super important. I think what happens in the pre-market tends to be pretty important. I put emphasis on it. I will always watch those pre-market highs and lows. I'll watch the yesterday highs and lows, but I always have that pre-market on. Something that I've taught a lot of people. I love to take note of any pre-market trend that is forming. You can often get halfway decent scalps or something, nice early entries on trades if you're like looking at these trends. And maybe you see us push right up into this trend. That's a reasonable enough short for me right off the open. I didn't catch it, but reasonable enough short. I think you can get some really, really great information off of those things. I will say, just because there was some confusion recently regarding it, myself, big money, anybody on Wall Street, um, won't consider an all-time high if it happens in the after hours. So that was one, here a couple days ago, some people were saying, oh, QQQ is or is not at an all-time high. Me, as well as most other people, all-time highs are set during the New York session. So that is, there's some weird nuances to the after hours. It is important to remember there's very little volume, but there is big money making some things go on in those after hours. So in my opinion, it's always worth watching. Another one that I watch, I love to watch those big levels. I didn't talk about it, but this high of that PPI candle lining up almost perfectly with the opening range would for sure for me have been additional confirmation to be short there. Could I send the script? I think it's in my tab. Let me look. And um, if it's not, I'm looking right now, then I'll get it posted real quick. River pinned. Yeah, if you just click on the pinned tabs, it's the third pinned message down. Oh yeah, so I mean, yeah, George, I use Active Trader. I mean, it's too easy. And I love Active Trader on Thinkorswim because if you like say you want to like limit into something, which is what I was doing on some of these dips today, I would just have a limit order. It pops up a line on the chart. You can see where the price needs to hit to get those fills. And then same as when I'm trimming, I always have limit orders waiting on the upside at EMAs or where those previous resistance or supports are, to trim so that I don't actually have to click the button and it does it for me. Yeah, Norman, most everything is just pretty dang sideways. We had a couple breakdowns, couple breakouts here and there, but for the most part, the market didn't do a whole lot today. Let's see what we got. We got Norvin asking charts. We'll get back to that in a second. Um, Anyone using Tasty Trade? I mean, I don't use Tasty Trade, but it's a good one. It's actually made by the guys who made Thinkorswim, so it's a good one. How's Flip's always right? Because he trades support and resistance and trends, just like, you should. Everybody just they try to do too many things and they just ignore the fact that there's some like really good, find good levels and trade it. Trade those levels. Yep, Raphael, me too. I think I even have a pre-market high and low pinned in mind, and that's normally how I do it. I'll just follow those pre-market highs and lows, and trade those. So that's a more detailed question than you're giving it credit for. Unless you mean quite literally just a support line, you just select the support tool and then you put it where you think support or resistance may be. But as far as how do you chart support and resistance, it's a little bit different for everybody. I like to do a lot of mine on the daily, and those longer time frames, they tend to just be much stronger levels. I'll look a little bit at 4 hour and stuff like that, especially if we're at all-time highs. But what I like to do is I like to look for the dramatic highs and the dramatic lows on uh you know, the daily time frame, and those levels will work over and over and over again for you. Oh, thank you for that. Yeah, yeah, I'm all about it. I like the premium voice chat. I have a ton of fun in there. I just know that, Nanda's been in there a lot, and Nanda's been in there a lot lately. I think it's been going good. I mean, I guess I don't really know. But I have a few official days. Like I'll be in there tomorrow morning. I don't exactly I have them like 7 or 8. I have 7 or 8 of these a week. So, yep, Fridays I open premium VC on Friday, and then I close pro on Fridays. And then I also do, oh well, today. Well, I'm supposed to do after hours or closing premium, which I got in there a little bit late, and that was actually my bad. I thought Flips was in the premium voice chat down there, but he was actually in the sports tab. I hadn't realized that. And so then that's why I was, a half hour or so late, jumping into the premium one. I was mistaken. I thought that he was trading, but he was sports, and so that's why I jumped in there. And then I know there was also additional confusion, pardon my language in my post, you know. I don't like that. I don't know. I don't like the stages thing or whatever. Like I don't want people to have to raise their hands. Voice chats are, I mean, sure, we're in there taking trades. I'll give you my trades, you know, and we can, you know, hopefully make a couple bucks together. But voice chats are for talking and for questions. And, you know, I mean, don't get me wrong, we had like somebody burping in there today or whatever, and that was gross. But you know, that's just part of it. I'll just mute your mic, no big deal. Like, and no hard feelings. You know, no hard feelings if I mute your mic. You aren't in trouble or anything. I just mute your mic because it was unmuted. And so I did end up in the video game one. I think that did confuse a couple of people. But uh, you know, that was just how it went today. But thank you. And you know, if you want me in those, tag MMA, tag Tilia, say you like it. You know, that's the thing. You just gotta tell people. You know, you tell people what you like, and you know, one thing that we really try to do here is keep you guys happy. Like me and Tilio, MMA, all of us, like we love. I'm not known or anything, but we love OOT. You know, we want all of you happy. We want all of you learning. We want all of you making money. That's what it's about. So if you like something, you want more of it, make sure you tell them. Yeah, Flip's gonna be tough to keep up with, and especially he has a high risk tolerance, you know, and a lot of people don't have those high risk tolerances. Like he's got more money, so he's willing to put a lot of money into those trades. And so don't feel bad, you know, don't feel like you can't keep up with him or anything like that. You know, that's I mean, or like be upset about that. That's just part of it, you know. He likes to trade those big volatile names. He does. I will say, you know, you might not necessarily keep up with me because our entries are both of us and Flips and I have traded well together. I have traded with Flip since probably the day he started trading. You know, I've traded longer than he has, but him and I have been trading together forever. So both of us, you know, our entries are specific. They might come a little bit quicker than you want. We both do try to give our plans before they come. But you know, happy you guys are enjoying it. But I know a lot of people do have trouble keeping up with him. I do have levels on IWM. Yeah, I love trading IWM. It was a dumpster today. My buddy got this one. Yeah, he took it a little bit early, but he ended up making some nice bucks. But this is what I care about. I don't know if you want to like chart him down or anything. You know, I will say, even though we're selling, I'm starting to like the buy on it. I think the buy is coming sooner than later for sure. Yeah, and that's definitely right. The people that are trying to trade on a phone and follow flips, they have a lot of difficulty. And same as me, you know, the thing that I can recommend is if you are using, you know, if you are on your phone, it's all you got, no problem. You know, like don't feel like you can't trade because of it. However, really learn about limit orders. You know, you don't want to rely on market orders. Really learn about limit orders and learn some support and resistance so that you know, and you probably don't want to take those 10-minute to close SPX or spies or whatever, you know, whatever one of us is trading. But learn about it, learn about setting some cells and, you know, let your trades work. It will help, you know, it's doable on the phone. It's not easy, but you guys can make it happen. So how do you hold longer? Number one question that I get always. And you're only trading with one contract. Well, so you don't. If you have one contract, you trade your one contract, you enter at your entry, and you take profit at your take profit. Uh you don't care much about what's going on in between. You enter and you either stop out or you take profit. Those are the only ways that trade can go. So anything that happens in between doesn't matter. So, however, I will say, and again, we're gonna go, you know, blank chart. Maybe today's not the best day to use even. But we're gonna go blank chart. A method that I like to use and I like to base it on candles, and if you aren't on a computer and you don't have Thinkorswim, it's going to be a little bit more difficult for you to do this. But you know, again, hindsight trading. So we got to pretend we're just awesome at trading. Maybe you get short up here. Well, now what I do is I watch breakdown candles. So we get another breakdown candle. Great. Now and you know, what do I consider a breakdown or a breakout candle? I want a bearish candle closing near its lows. You see some continuation on the next candle. You know, this is what I consider a breakdown candle. This is what I consider a breakout candle. Sometimes they last 40 candles. Sometimes they last 4 candles. That's just part of it. But say you get short right here, again, we're just hindsight trading. Then market starts selling and you get another breakdown candle. You move your stop to here. Well, This one's not a breakdown candle. So you don't move your stop. You leave your stop right here. You don't touch it. You let the market work. You let the market work. And then when you finally, this one arguably could have been a breakdown candle. Maybe you bump your stop to right here after this candle because it is, again, bearish candle, closing near its lows, small wick on the bottom. Looks pretty bearish. Well, you get a big buy up candle here. Well, now you keep watching the market. And here's kind of a breakdown candle. Here's kind of a breakdown candle. Here's kind of another breakdown candle. So now you feel comfortable to move your stop to where the breakout begins. So as the market keeps breaking down, again, you get breakdown, you get breakdown. This is a big breakdown candle. Now you move your stop to here, and you can see on this bounce, you're ultimately going to get stopped out right here. But this is a way to use the chart to tell you where to move your stop, and do you keep letting things run, all of that. You could even do it on the downside. Maybe you saw this, you saw it as a reversal candle. You should. So you bought the dip, stops below the lows, so you're entered whatever, maybe you're entered around here. Well, you get a nice big breakout candle, and then you get another nice big breakout candle. Move it to the bottom. Then you get another nice big breakout candle. Move it to the bottom. You get a couple more of these big breakout candles, and I'm likely moving my stop to here. And sure, you get stopped out, and the market pushes a little bit more. But ultimately, if you saw it up here, you see this breakdown, then it takes 40 minutes to get back up to here. It's worth less money here than it was here. So use the chart, use the candles to tell you to hold longer is the best thing I can do. Uh, yeah, I know Nando shares his screen a lot. I try to share mine in Pro when people remind me. I'm happy to share mine. I should put that out there. But sometimes I forget to, but I do. But the main differences between Premium and Pro is that um, Pro is focused. You will only see trading talk, or you'll only see trading relate. I can't say only, but 99% of the time, you're going to see trading discussions going on in that voice chat. It's or in the trade floor over there. It's much more serious. You got a little more access to people like me and Tilio, where it's easier to keep up in there. So we're doing good at keeping up in there. A couple of, some additional alerts as well. Then you have me 5 days a week trading in Pro. I don't know if that's a selling point or not. But so it's just a bit more serious, a good amount more serious in Pro, is really the main difference. And what we've seen is, as a whole, people seem to be really happy. They're learning a lot. Hopefully it's going good for everybody. Yeah, George, it is, and that is part of it, also the market is just volatile. So, sometimes like you're long, 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 and then finally you're short, like sometimes it does just go like that. Uh, Oh, Norvin, I don't know if we're quite gonna get to this tonight. We'll give them a try. Um, you trade on iPad and iPhone and use trading view for charts. Nice, nice. Yeah, that's good. That's good. Um, well, I was actually so this is from it. This is uh this is my little spreadsheet to keep track of. Um, uh, and in the last, I don't know when we started. I think this is 6 weeks or so. We're 82 wins, 11 losses in mine. So like an 88% win rate or so. And don't get me wrong, there's been some, we even had one today. But I try to do really good about them. Just to give an example. Um, uh, oh no, because it ended up moving, I forgot. Let me find another one. There's like, you can see there's here's one, like a 10 percenter in here. There's a very good chance that something happened. That something happened where I didn't like this, or I said, hey, we like something's going on that oh yeah, here we go. Didn't like the trade. So it's 9%. We like that's those happen, and here's like some tens. Here's here's a nice 100% loss. Oh, that was an $8 spy lotto at the end of the day. So I mean, we have a little bit of everything. We got some 9% winners. I mean, look, here's a 657% winner. Here's a 750% winner. So we hit nice ones. We hit normal ones. I mean, it is what it is. Like there. But here it is. This is everything we've done in voice chat for the last 6 weeks or something like that. 11:45 is so deceiving. I will say it's deceiving. I'm doing it. I don't mean to be deceiving. I just don't know a better way to do it. This is if you took one contract and you sold one contract to all of my trades and you sold when I said I am all out. So, there might have been some where maybe you trimmed earlier, or later or whatever it was. But that's one contract over all of those trades. So I don't know. I mean, that means we're making 12 bucks a trade, give or take. Yeah, yeah. I mean, I do other things, but yeah, definitely. Yep. That's how I'm so active because I need to be. This is what I do. And then I should also say, we like these PLs, these are tough because uh these are tough because maybe somebody didn't trim the 10%. Maybe somebody didn't trim the smaller percents or whatever it was. Maybe somebody didn't trim this 10%. Maybe, well, let's see. There's not a ton of little ones in here. Maybe somebody didn't take the 19% or whatever. So it varies for everybody, and you getting the exact same fill and all of that. It's hard, but I mean, I'm just trying to keep track of it so we got, I don't know, some sort of record. Look, here's even this one. XLF swung this thing. One contract still in. Absolutely smoked so far. Well, I mean, yeah, but you have to remember that I'm not new to this, and I'm not like a person who started trading after 2020 or something like that. I I have experience. I got, I've been doing well options for I don't know 8 years, 9 years, and then but in the market in some way or another for a long time, 10, 15 years, 15 years, 2008-ish. But then also was interested in the market when I was a kid, so always kind of watched it. Oh, port size is small. Most people trade with way more than I do. I was even saying that in Bush Chat today. I don't make a ton of money. I make enough money to live, but I'm not like rich, I'll tell you that much. Because I trade small. I trade small. I have my goal not even a goal. I trade small. I know what I want to make, so I try to make it. And I pad my pocket. I pay my bills, and I'm happy. But I got watches and fancy cars and shit. Okay, well, that's gonna do it. Thank you so much, everybody. I appreciate y'all for being here. Got a little rambly there at the end, but thank you all for being here. Great lecture, great questions. Ended up having a lot of you in here. If any of you do want that opening range study, I got it pinned in my tab. So thank you all for being here. You guys are awesome. Oh God, Norvin. Oh Norvin, let's check it out. Google Ripper. I mean, I don't even have levels up here yet, Norvin. Here's the one we care about. Oh wow. I mean, old all-time high retest. You swing calls? I know you swung calls yesterday. I was a little worried. Gotcha. Right on. Thank you all. Yeah, and if you guys enjoy this, make sure you tag MMA and Tilia and say that you like the lectures because I appreciate that. And maybe they'll keep me around if you guys keep saying you like them. Yeah, yeah. Tilia, I can't exactly say. I don't know, but yeah, yeah. They own this place. Yep, Tilia. Probably haven't seen his name much. He's a little quiet these days. But if Tilia is talking about trading, you listen to it. Always. It's like if I tell you something and Tilia tells you the opposite, just like listen to him. Eh, Carvana, huh? Boring looking. Really what I'd be watching there. You could buy those dips down there at 235 or something, but not interested in a trade here. Resistance, if anything, I'd be short. I'd be short up here at these highs. Okay, well, right on, everybody. I'm gonna go eat some soup. You guys have a great night, and we will catch you all tomorrow. Thank you for being here. Yeah, thank you all.